In the meantime, Netflix is joining the Motion Picture Association of America. Between that and Oscar nods and Golden Globe nods and all that, it's on fire. So Scott Martin says if this is proof that Netflix is a good bet, maybe you keep betting on it. You know, everything's been going Netflix's way. I guess the only concern was whether the momentum could be maintained. That is, the number of new subscribers they're able to get to justify all the costs of getting the new programming. What do you think?
So far, it looks like there's some struggles here and there, Neil, to your point. You know, let's face it, Netflix is currently, let's say, the dominator in streaming. And so what happens is when you have the millions and millions of subscribers they've shown, the law of large numbers eventually kicks in, especially domestically with respect to the U.S., where that growth still happens, but it slows. So to me, really, the interesting aspect of Netflix is twofold. One is the fact that, as you mentioned, they have the ability to raise prices, whether it's $1 or $2, depending on the service you're getting, and especially the growth that they're seeing overseas in the emerging markets, foreign developed markets, because if they've got pricing power here, I think that helps offset some of the slowing growth in the U.S., and then the emerging market and developed market growth is still really strong.
You know, a lot of people use the analogy of Netflix like an Amazon in the beginning, where analysts were always questioning the amount of money Jeff Bezos was spending to develop the infrastructure for this global retail powerhouse and ordering centers and the rest. But is it an accurate analogy? I mean, obviously that proved true as the stock rocketed, and despite a sell-off late last year, obviously has been an appreciable performer for owners. What do you think?
You got to spend to gain. I mean, look at the chances Netflix has taken with their spend over the last couple years. I think we could say it's paid off. I mean, one thing that I think Netflix, Neil, has going for it today that it maybe didn't have even last year or certainly a couple years ago is the original content. You know, because when Netflix got started, all they were doing was just redistributing stuff that a lot of people have already seen. And now you've got original shows like Stranger Things, which I admittedly love. Space Force is another one that's coming out that may counterbalance The Office possibly being taken off Netflix, as we heard recently, and movies like, as I'm not afraid to admit on national TV, The Babysitter, which is a Netflix original, which I absolutely loved, that came out, that's true, last fall. So the original content going forward for them is very big, and probably another reason that they joined the Motion Picture Association of America recently.
You know, I've been looking at a lot of these stocks. I'll lump them in, and not too generally, with the you know, the Googles and what's been happening with Apple and Amazon and Microsoft. Now, with the exception probably of Apple, they've come storming back, these issues, in the new year. So what is representative of this bunch this year?
So far, Netflix has been one of the hottest stocks of the year. And you know, we mentioned the association they'll have with the MPAA, and I think that's something interesting that the stock is starting to get excited about. Now, don't forget, in Q4, as many of the tech stocks had trouble, Netflix was not alone from that. I mean, they had a tough quarter. So a lot of those stocks that we mentioned or that you mentioned there have come back in a nice way because they probably got oversold to the downside. So if you're looking at maybe the FANGs in general or some of those tech stocks, especially Netflix, just keep in mind that they've had a nice bounce off that low on Christmas Eve last year. So if you're expecting things to kind of keep going the way they are, they probably won't. But there probably is still some growth ahead to be had.
You know, we've talked about the volatility of the markets. Notwithstanding, the major averages have been up double-digit since the government shut down. Not that the two are joined here or relate to each other. But if the markets are panicked about a shutdown that could go on for maybe a while, they're not showing it. Why is that?
They certainly have a funny way of showing their concern, don't they? I mean, the markets are up about 10%, depending on your favorite index, since the government decided not to work. And maybe that's just an indication of maybe that's what the market wanted all along. But look, and I think another thing that would be interesting, too, is, you know, we're coming up to debt ceiling issues as well, Neil, and bonds aren't reacting either. I mean, bond prices are relatively flat, pretty stable, not volatile. So you think the U.S. debt, I mean, the trillions of dollars that we're racking up even year over year now that, you know, seems to be a big concern is really not affecting our bond prices. So that, along with the stock market, seems to be saying that this maybe isn't as big of a deal as some of the Democrats may be saying it is.
So when you have outside events, I know you look at these are fleeting events, they come and go. The China trade thing could be far more substantive, and you're getting talk that the talks are going to go on that both sides are optimistic they'll be fruitful. I mean, how much does that play into your market strategy?
A lot. That's one thing you and I have talked about quite a bit in the last, say, 3 to 6 months. And I'll tell you, as we take these 2 steps forward and then occasionally that step back, it impacts the market. And I think what you're starting to see not only in the price action in the S&P 500, but look at company earnings. We're coming into a really pivotal company earnings season here. And we're starting to see from some of those multinational companies, which make up very big parts of the S&P 500, talk about these tariff impacts, talk about input costs rising. And so if you're taking away maybe a token or two from, say, what the companies are saying in the next few weeks, listen to how they're starting to pay attention to this trade war, these tariff issues, because that might affect their outlooks and therefore affect the stocks you own.
Well said, my friend. Well said. And despite your, artistic, preferences and all of that, movies and otherwise, and series, we still love you here. All right. Thank you very much.
You got to check it out, man.
Absolutely.
I know you'll like it. Talk to you later.
Absolutely. All right. Thank you, Scott.